Welcome back. Today we're trading the New York PM session on gold. Price had been quietly accumulating since the Asian Open, so I marked out the entire range and waited for a clean breakout. What happened next gave me a high probability setup. Let me show you. First, context. Gold built a clear accumulation range through the Asian session. I drew the range high and low and stayed patient. When price finally broke out, it did so with a strong momentum candle that also created a fair value gap. That gap became the key level for my plan. My plan was simple and rule-based. I marked the fair value gap created by the breakout and waited for a retest. I placed my entry at the encroachment of that fair value gap, the same area that produced the breakout, because it offered confluence, breakout retest plus imbalance fill. Entry, consequent encroachment of FVG that created breakout. Stop loss, bottom of 30 minutes breaker block. Target, opposing liquidity at 5,091.7. I sized the position so the risk matched my plan. Stop loss sits below the 30-minute breaker block. Logical structural invalidation. My target was the opposing liquidity cluster at 5,091.7. Risk to reward and position size were set before. I clicked buy. Stop loss rationale. Structural invalidation. Target rationale. Opposing liquidity. Note to self: always size to risk. Never move the stop to justify a trade. Averaging trades is generally not a good idea, because you are doubling down on a position that is telling you your analysis were not correct. So when you place your stop loss, it's advisable to only move it to break even when trade gets to one risk to reward. After entry, I let the trade play out. No micromanaging, just rules. If price reclaimed the breaker block, I'd accept the loss. If price ran toward the liquidity target, I'd trail or scale out according to my rules. Discipline beats emotion. In this trade, the breakout retest held. Price respected the fair value gap, consequent encroachment, and the move targeted the opposing liquidity at 5,091.7. The trade validated the setup, accumulation, breakout with momentum, FVG retest, entry at encroachment, stop under the 30-minute breaker block, and a clear liquidity target. Key takeaways: patience, confluence, predefined risk, follow through. If you like this breakdown, hit subscribe for more live session recaps. Trade your plan, protect your capital, and I'll see you on the next setup.